Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Friday, the 21st of January. And stock which was formerly a hero, now close to being a zero, I suppose, at least in terms of the share price. But just 1 or 2 points to note here. One is obviously the way that we're now below the 0.67 low of the big down day that we had. So that's point number one. And I suppose the earliest end of day or the earliest signal that you might have a potential bottom in place there would be an end of day close back above 0.67. So that's like a technical rule. The other point to look at is actually the RSI indicator, which after the latest collapse, it's down at 26, but actually was lower back in April last year. So we went down to around the low teens. And that is something that maybe we'd have to see a retest of the low teens potentially to make the shares a sort of ultra oversold situation. So a little bit more slack there actually on the RSI front to go down for the shares. I suppose as a guess, one would probably be thinking something like 0.45 or zero point 0.4, i.e. For the downside here, i.e. That the people who bought after yesterday or after the collapse earlier in the week, they would be stopped out and then the shares would go down. You sort of get a double dip type situation. But let's see how Advance goes after the rug was so unpleasantly pulled. Slightly better situation to look at is Angus Energy. And here it's of interest because we're seeing how many days the shares can remain above that gap to the upside that we had at the beginning of the week. Top of the gap there at 1.07. The longer we stay above that, the better this chart looks, and the greater the prospect of a move towards 2p, which is the top of that broadening triangle from the end of January last year. A stock which may be on the way up is ADM Energy. The reason for saying that is that we have a bullish divergence line there. It's quite good actually as an indicator that. So you've got a bullish divergence line, i.e. We're at the lows, but the RSI is rising. What we'd like to see, though, after today's gap to the upside is an end-of-day close through the 50-day moving average at 1.07, and obviously that would be a new high for January as well. If we can get through that, then there may be a target as high as 1.8 or so, which is the November gap down. So something to possibly shoot for at ADM if we have finally seen the bottom, which it does start to look as though we have. Another small cap situation which is of interest at the moment, Argos Resources. Here we broke that line from May and the 50-day moving average, 1.12. We also gapped up at the beginning of the month and held that gap. So as you can guess, very good on the charting front, that situation. Plus we've got a V-shaped bull flag above the rising 50-day moving average. So it looks as though there's decent momentum building here at Argos, and we could at least initially hit the 200-day moving average of 1.94. Big picture target maybe over the next couple of months as high as 4p at the top of last year's broadening triangle. Stock which we're sort of rather loath to cover, Borders and Sun, just because it's not really, it's not exactly the most world's best liquid trading stock. But we have had a bullish divergence line there on the daily chart since as long ago as mid-October, and that's finally pulled the stock higher through the 50 and 200-day moving averages. I think the 200-day line, the key there, and the longer we stay above that, the greater the chance of a decent or further decent upside. We hit the initial April resistance line target around 1.37. Above that, it could be as high as 2p, which is a February resistance line projection, the top of that triangle from back in February last year. But the longer, as I said, the longer we stay above the 200-day line, the better for Borders. Stock which occasionally jumps up is next, Cat and I. Here we've had, interestingly enough, a bullish divergence line there since the early part of November. Shares sort of made narrow new lows, which is typical of that situation. But it looks as though on this occasion, with the RSI now through the neutral 50 level, we could have another go at making it up towards the 1p area, or if we're really lucky, up towards the 200-day moving average at 1.14. The stop loss on the idea really back below 0.6. But obviously, as we're so near the lows, you might as well have the full stop loss below the 0.5p level if you can afford that. But otherwise, 0.6 ideally is not broken. Cyanconode, one of the better performers of the recent past. And here we're looking at a situation where there's a bit of jiggery-pokery after that spike towards 30 pence that we had in November. Bear trap rebound from below the December support at 18.8 pence. Above that, looking for the mid to upper 20s again, hopefully maybe touch 30 pence this time. The rising 200-day line looking encouraging, and also the unfilled gap to the upside from October, providing the solid structure for the bulls at the moment. Another stock which may benefit from its bullish divergence line here, we've got Europa Metals, so rising line there from basically the November time. Looks like we should hopefully then break that 50-day moving average at 4.78 and the March resistance line to give us a target filling that gap down from October as high as 8 pence. So that would be something for bottom fishers to get interested in. Moving along to Marichal, where I think from memory Luke Johnson took a stake, and obviously the shares have been on the front foot generally since then. Got a rising trend channel, a wide one from back in February last year. That's heading up towards 9 pence, which obviously looks rather ambitious at the moment, but at least a retest of the 4.9 pence area from back in the end of October could be on the cards while we hold above the 50-day line at 3 pence. So that's initial target there, 9 pence maybe on a 2 to 3 month view, if the shares get some decent interest. On to Oilex, which was asked for or requested earlier this week. It didn't really move until today. Breaking 0.19, I suppose, has been, or 0.18 has been the key here. So above that, looking for hopefully the mid to low 20s. If you're cautious, you'd wait for a clearance of 0.22, which is the April resistance line projection, but that might be something that some people think is too much to give away on the upside and rather go in at this stage. And obviously, ideally, we don't go back below 0.17, the 50-day moving average, as we head higher, hopefully, on that. Stock which has done sort of played by the rules in terms of its charting pattern over the recent past has been Prospex Energy. I suppose the big win here for the bulls was the gap to the upside that we had back at the beginning of December. That was held well shortly afterwards, and that's why I look for those unfilled gaps to the upside. In fact, this was an island reversal, so we gapped down, then we gapped up, and we've hit that target that I've been looking for quite a while, just towards the 6 pence level. Above 6 pence, looking for a fresh target here, which would be 7.5 pence. And maybe that could be hit by the end of next month, or I suppose the way things are going at the moment, it could be actually by the end of this month. So happy days on the technical front there at Prospex. Just a few stocks to go now. First one is Pennant, which don't look at very often, but here we go today. Here you can see that I suppose the big breakout really was at the beginning of December, breaking 32 pence. We had a bit of a sideways shuffle since then, but the rising 50-day line and that support above the 50-day line as well that we had early last month has been positive, and above the 200-day moving average now at 34 pence. Looking for a retest of at least the one-year resistance at 52 pence and possibly a lot more, so looking encouraging. Again, this is one of those situations where there was an unfilled gap to the upside, bear trap gap reversal back in September, and that was actually the start of the revival for Pennant. Hence, it's always good to look out for those gaps, unfilled gaps. On to the works, which I don't think I've ever covered before, but here we are. Rising 50 and 200-day moving averages, and also a gap through a resistance line from May, so that looks like the starting gun on a decent move. Above that line at 60 pence, looking for the top of the channel from back in February last year, as high as 85 pence, hopefully as soon as the end of next month. Finishing off with Wood Boys rather. Here we've got the shares. I suppose they've been trying to find a floor of late, and what's interesting here is you had that one-day clean out, gap down, and then just shares bounce back after that quite well. We've broken a line of resistance from April, also breaking the 50-day moving average at 4.3 pence. We can hold above the 50-day line, then one would hope that the shares would head back towards that May gap area, which is, I suppose, 6 to 7 pence over the next month or so, and ideally we don't see any price action now back below 4 pence. I think we've explored that quite well. That's it from me today. More updates over the weekend.